If we are, I'm trying to see if we're live on YouTube yet because it's a little funky. Yeah, look, I just got the notification. Awesome. Yeah, let me go to the stream. So if you guys are watching this, okay, I'm gonna go check it. I'm gonna go check it out myself right now. Just so if you guys are with us, just bear with us. We are doing a complete behind the scenes right now, but we're getting ready to launch. Oh, you know what? You know what? Let me fix this right now. I'll do speaker view, and then that will switch over. Yeah, I don't know why it's not centering. Let's see if we get both of them. Right now we are just doing some troubleshooting for checking this out. For some reason,
There we go. There we go. Now I got you there. You're good. Let's
well,
see.
I think there's a little bit of a lag, so I can see what the output looks like right now. And so if I do it on speaker view, it looks decent.
Yeah, do the speaker view. That's what we need to.
Yeah. Now the other thing I can try to change. And so if you guys are with us right now, definitely appreciate you guys watching. Right now we're just doing a complete behind the scenes of showing you how we're making videos over here. Basically, John logged on like about 3 seconds before we're doing this, which me too. So we basically going to see how the sausage is made, but we're going to turn this into probably 3 videos, and then at the end of each video we'll have an opportunity for you guys to ask us some questions about different things that are going on. But yeah, right now I'm just trying to make sure that the video looks okay because for some reason it is turned out a little funky and it shouldn't be.
Yeah, no, I like it the way it is now, Tim, where it's just between whoever is speaking. So.
Okay, yeah, it's just for some reason it wasn't like fully centered on the screen, whereas it looks good on my screen, but it's not fully centered on the main picture. What I can try to do right now is just take a video of my screen. We'll have a video in Zoom, so I guess for the live recording it might not be awesome, but we'll make sure. Let me make sure we got this recording. Just a second here. Okay, somehow I turned off the recording, and now I'm trying to figure out how to get this bad boy back on. Let's see. Oh, there we go. Record. Dumb me. All right, cool. Yeah, so we are recording, and what we're going to talk about today is we've got. Basically, a lot has gone on since, so much stuff is going on. One of the things that's going on is negative interest rates all around the world, absolutely exploding. So that's one of the topics we're going to be talking about. Also talk about even the media now is starting to catch on to the fact that there's probably a recession that is somewhat imminent. I mean, I don't know if they believe that or if they just want to get Trump out of there. John and I will discuss that. And then we're also talking about Trump talking about 100-year bonds and payroll tax cuts and all sorts of other stuff to try and save the system, so to speak. So right now I'm trying to see if I can monitor YouTube comments, but I'm okay, cool. Yeah, all right, cool. Looks like we do have some people talking. Brian Laris, everything was good. Sounds good here, man. Dave says, reading that book at the moment, 5th edition. I don't know if you're talking about Creature. Okay, Jekyll Island, awesome. So John, do you want me to start these off, or do you want to start it off?
You can start it off because I don't have in front of me exactly our topic that we're talking about. So yeah, you just go ahead, Tim, and get it started, and let's give our viewers some fantastic content.
All right, so you guys are seeing how it's made in real time right now. That basically, John and I, consuming so much news on a daily basis that we could pretty much just wing this, which is basically sort of what we do when we do come on here. So we'll get this kicked off right now. And just to let you guys know, at the end we will address all the comments of each video. So we're gonna have 3 different videos, and after we wrap up each one, then we will go from there. So the other thing I need to get a time check. It's 2:11. Probably try to keep this one to 20 minutes. Yes. John and I can definitely ramble, so we'll see how it goes out. But everyone, this is temperature. Oh, wait, let's wait till right now the picture's on me. Okay. Hello everyone, this is Tim Picot, and I'm joined by John Snyson of World Alternative Media, and today we are going to talk about the negative interest rate situation all around the world. And what's crazy is it was, I believe it was June 17th, I had a walk and talk video with my dogs, and I was talking about how the global negative interest rates was at 11.7 trillion, and I was thinking, oh my god, that's such a huge number. And then it was only a few weeks later, maybe a few days later, I was commenting on how we're at $13 trillion, and now we're basically not even 2 months, or a little over 2 months later, and we're talking about $17 trillion of negative interest rate debt, which is absolutely insane. And I can't even believe we've even gotten to the situation that we're in right now, that nobody seems to think that there's any sort of problem at all with having this amount of negative interest rate bonds. And so what I'm going to do right now is share a screen with you guys where it shows, and this is actually corporate debt. And you'll see on the screen, right as we get to July 1st, it just absolutely explodes, like a pretty much hyperbolic, like what we saw like Bitcoin from November through December of 2017, just a complete parabolic move all the way up there. And if you're a company, why wouldn't you try to take advantage of these low rates right now? And from the the sovereign debt yield right now, or from the other thing that's really going on is the share of a percentage of the negative interest rate debts is also exploding. So I'm going to pull up those stats and figures right now. But for right now, I mean, John, what do you think about this negative interest rate situation and how much it's proliferated and what that means for the global economy?
Well, negative interest rates in the first place is a lie to the public about going bankrupt. When you go into negative interest rates, it doesn't make sense whatsoever. And let me just give you a couple of examples here. So, for example, you want to charge people with a negative interest rates. You want to charge people that actually have money in a savings account to actually hold it there. Meanwhile, you're going out and gambling with that money on the markets, stocks, bonds, commodities, derivatives, whatever it is that the bank feel and see fit to invest in, and there you go. It's pretty insane to think about that. The bank will charge you for taking on a huge substantial risk these days by having your money in the bank, and then it doesn't make sense whatsoever. And then on top of that, if you're an investor, you would want to invest in something solid. Well, you're gonna go and invest in something that, let's do an example here. Let's say that it's $100,000 dollars in bonds, and could be a German company, for example, because they have a corporate negative debt right now. You go out and borrow $100,000, and then let's say that the term is about, 10 years. Now, the principal that you actually will get back at the end of it will be $99,000, and and which is insane, because now you're seeing actually that you lost money on the principal itself, and actually you have to pay to hold the investment in the first place, which is just crazy to me. Like, why would anybody pay to hold an investment and then lose money at the end of it? Doesn't make sense at all in the modern, in any world, because we never have had negative interest rates throughout history. You gotta remember that this is just an invention by these Keynesian bozos that are sitting around the world, at the Financial Stability Board. They're sitting in the G20 or organization, the G30 organization, and other, think tanks around the world, and are spouting this nonsense about going negative. The reason why they want to go negative, Tim, is because they want to corral everybody into a banking system. But to really go negative, how they want it, they really need to remove cash out of the equation, because with cash, you can potentially, if you find a vulnerable bank, which is 99% of banks today, you could convince let's say 10-15% of depositors to start withdrawing cash from that bank that they have in deposits, and then you have substantial trouble already. And that is, throughout history, it's been the number one killer of banks, is a bank run, as that is called, when people pull their deposits out of the bank account. Meanwhile, the actual deposits are not really there. They find that out, of course, throughout the bank run. when the bank goes bankrupt before they paid back maybe only like 10 or 15% of what you actually held there. And and what you see is that they believe that you will fall for this, and of course with the negative interest rates, the number one thing that they really need is to go cashless, because when you go cashless, well, now there's no way out of it. You're stuck in the banking system forever. And as Josh likes to say, he says that if your money's not is in the bank, it's not yours. And of course, if it's electronic, it's never yours. You never own your money, and literally will be in the banking grid. So you basically live in a gulag, in a banking gulag, where there's no way out of it. This is insane. And this is what they want, because what they think that they could do is they think that they could corral you into this cashless system with negative interest rates to then force monetary velocity into the economy by forcing you basically taxing you negative 3-4% to have your money in your deposit account, and then you'll start spending it into the economy, because nobody's spending the money right now into the economy. I just found it so funny how Trump just said recently how the American consumer is stronger than ever. You just gotta really laugh about that when you see the massive.
You mean the chosen one, the president of Israel, Donald Trump, that one. So, and one of the other things that is coming out right now is, you had mentioned Germany. Well, Germany, this is actually news of just as of today, for the first time ever, issued a 0% 30-year bond. So even at 30 years, they're paying nothing as a German, which is absolutely insane. And then also right now, we're taking a look at a chart where it shows the market value of negative yield bonds as a percentage of global bonds. And just eyeballing it over here, it's about a little over a third. So we've got about 30% of all the bonds globally right now are negative. A crazy situation. Here's another chart that we had talked about earlier that shows the negative yielding corporate bonds and how those are going parabolic. And then the other chart here we have is it shows the United States, it basically shows the fixed income, U.S. fixed income accounts for over 95% of all income yield around the world. And the other thing that's important to know is, even though that these are actual nominal negative interest rates, it's important to note that we probably have been underneath real negative interest rates for quite some time, probably for 100%. At least the past decade. And what that means for the people that aren't financial geeks like John and myself is that, let's say the real inflation rate is more like 5, 6, 7, 8, 9%, and as opposed to 2. And so if the real inflation was even at a lowball estimate of, let's say, 5, and the economy is even growing at Trump's highball estimate of, let's say, 3.2, that means that you've technically, since the inflation is more, that you've technically almost lost 2% per year. And then you just keep
purchasing power,
that
exactly.
And stacking it and stacking it and stacking it. And Josh and I did a video a couple weeks ago on the homelessness in California, and a lot of this has to do with a lot of people's income problems aren't not necessarily an income problem. It's the fact that everything they're buying, it's keeping up with the purchasing power. So
stop printing money.
The symptom is, and we'll get to that a little bit later on, the printing money, but the symptom is we're going to attack the employers and make them start paying more, whereas the root cause is the central banks and these bankers printing more and more money. Now, you'd also mentioned how they want to get everybody cashless, and they've got a creature from Jekyll Island right behind me. And by getting everybody cashless, then they can implement one of these systems. We've just seen recently, and I don't know if John could talk more about this than myself because I'm not an expert on it, but we have Fed Now. And so Fed Now is the Federal Reserve's payment system scheme, where essentially it's their version, their answer, so to speak, to blockchain, of how they can make things 24/7. So you're seeing that blockchain is having an influence on the Federal Reserve, because now they realize that, hey, if people are the market is starting to expect that, I can hold up my phone, blip, make a payment in 1 second and not involve any intermediaries, and I can do it 24/7. Why are we having to pay $30 to have a bank send a wire and have it take a week? And I think they're starting to realize that the jig is up. But what they want to do is usher everybody into their own controlled cashless version, not like a private, like Monero or Bitcoin Cash, where there's all sorts of cash shuffles that are starting to be introduced. And once they have us, by the what, and they have everybody cashless, then they can say, okay, well, we're going to institute, X% tax on everybody, or we're going to, do a haircut, or we're going to do a bail-in, or we're going to
capital controls.
Or we're going to give everybody an extra zero on their account, and even though that's not really going to do anything, I mean, we're seeing this like in reverse in other places. We're like, hey, we're just going to, or maybe they'll take a zero off everybody's account, and what they'll do, they'll start with the lowest hanging fruit first. They'll go with the, obviously, the rich first, and people who have more than, maybe 100,000 in their bank accounts, or they'll probably start with the 500,000 and above first, because that's going to be more politically feasible. But you see the writings on the wall, and this is something that, I know that you're a member of Freedom Force International, one of their top 11 guys in their council, and G. Edward Griffin has been talking about this for years. That here what they want to do is get everybody in this cashless grid, and now they're announcing the Federal Reserve's coming out with a cashless grid. China's coming out with a whole cashless, yuan system, and then now they're with negative interest rates. You're going to be forced to lose money by being in the system, and they're forcing you to then get more aggressive. And so retirees right now are forced to be more aggressive. And the other thing that really hits on retirees is something called interest rate risk. Interest rate risk is the basically the notion that, or it's the concept that when interest rates rise, it's sort of like a teeter-totter. So when interest rates go up, the underlying values of bonds go down. And so when you're at negative, and eventually when central banks lose control, and they've already lost control, having to go negative is basically an admission that they've lost control, because they need to print all this money because they're so far into debt that this is the only way to keep these zombie companies, zombie countries, zombie central banks alive, is to print more and more money. But what happens is, let's say you have a 10-year bond that is, you say you've got a 10-year bond that's yielding 0%. And then let's say rates go up, an unbelievable amount. Let's say rates go up 1%. So from 0 to 1, now since you have a 10-year bond, you've now lost 10% of your underlying principal. So if you are a retiree and you're actively withdrawing money at, let's say, 4% a year, and then you're losing, let's say 2% from your bond, you're absolutely getting killed, because if the rates go up, you're not losing 2%, you're losing 10% plus whatever you're taking out, plus whatever the real inflation rate is. You're just going to get crucified hanging out in bonds. And we did do a video with Tom Hegna, who's absolute expert on a lot of the retirement risks that are out there. I believe the video, I talked way too much in that video, like I'm doing right now, so I'll give it back to John soon. But but in that video, we talked about how the rates were staying low forever. The reason why they had to stay low forever is because there's so much debt that's out there. It's just math. If you have $20 trillion of debt and rates are 5%, then that means that the government is going to have to borrow at like 6 or 7, and boom, we're well over $1 trillion right there. And right now, the greatest economy ever, we're over $1 trillion in debt. So right now, probably getting close to wrapping up this video. We'll take some questions. But anything more you want to comment on negative interest rates?
Well, I think and believe that we're going to see negative interest rates all across the board in all the central banks. Now, there could be a lot of issues here with that people will finally the trust link will be broken with these banks, and especially the fiat currency systems that they involve, and people stop using them. So then at that point, they're going to print substantial amount of money, because now they're not getting taxation income anymore from the fiat that they can print and then legally enforce upon you. So I think, I don't know, like we'll see what happens. Like look at Denmark. They seem pretty docile and complacent with their 22% of negative rate mortgages right now, and the average of those is negative 0.1. And actually I checked out, I think it was Danske Bank that had a negative 0.56 for a 10-year term, I believe, on a mortgage. So
you know what? I just thought of it. Yeah, and people are commenting that my camera position's off, so I don't know what's going on, but the real version will look a lot nicer. But I just realized what's going on right now. So with Denmark having negative mortgages, Trump wants to buy Greenland with negative rates. It's going to cost him less money than whatever he wants to buy it for. It's brilliant.
He should rename himself a debt man.
Yeah. And
that's it.
Yeah, no, it's crazy. So we don't want to give away too much of the next video that's going to deal with this. But if you are watching us on the post show video, make sure you stay tuned to the next video, which will be on Trump and 100-year bonds. So I think that's probably a good place to wrap this one up for now.
Just one last thing before we finish, because you said that the 30-year bond from Germany just were at zero. Well, actually, the current rate, if they were to issue the 30-year bonds, would be at negative 0.18 on the 30-year bond. So that just tells you what a mess they gotten themselves into, and there's no way out of this. They can't just continue to print money, which they will. They would start to create new quantitative easing programs worldwide, and they're gonna panic. They're gonna buy everything. I wrote an article saying that the Fed will own everything, then nothing, and I believe that's where we're heading with all the central banks. Just look at Japan, what they've done with negative interest rates, buying up all the assets because they can prop the system up forever. They can just keep on printing money, and they could say like, yeah, we won't go bankrupt, but yeah, I I would really say like negative interest rates is declaring bankruptcy on your nation, on your corporation, whoever is accepting negative interest rates. Tim.
Yeah, and this sort of reminds me of your quote. Sort of is that was it the Jefferson quote? If we ever allow private central banks to issue the currency and credit of our nation, then we'll all end up homeless on the continent our forefathers conquered. And then I think it was first by inflation, then by deflation. They, with a stroke of a pen, they ended up buying up everything. Obviously, that's a paraphrase. I'm not completely like Rain Man over here with the quote, but anyways, yeah, tons of crazy stuff. Make sure. John has a conference coming up. I know a couple people speaking at it. I'm going to be one of them. It's the Winnipeg Crypto Conference. Also, forgot to mention at the beginning of the video, which hopefully Josh hasn't I meant to do at the beginning, but Josh is traveling around Europe right now, so that's why he hasn't put out as many. He has been still putting out quite a bit of videos, but that's why John and I are stepping in right now because Josh is doing some reports. It was doing reports in Italy. Now he's over in Europe, or sorry, in Spain. Yeah. So a lot of good stuff coming out from Mr. Segerson. But yeah, with that, also, so you want to give a quick plug to the Winnipeg Crypto Conference and what people can expect with that?
Yeah, no, the Winnipeg Crypto Conference is turning out to be really, really good now. We're getting more and more speakers all the day and sponsors getting involved, wanting to be part of the event. So we're very excited about what's happening in Winnipeg for the first time ever. When we were at the Futurist Conference in Toronto, which we did a live stream from, there was so many people that were super excited about us bringing this to a new place because they're used to having it at the Toronto, Vancouver, or Calgary, whatever it was in Canada. So it's good to they're super excited about wanting to come and speak and actually put forward their message to new people that they haven't met before, that they could educate on crypto, blockchain, and everything that entails. And it's very exciting to have all these people very interested to both come out and especially to be a part of it because it's historic. It's of course the first one ever in Winnipeg, and a lot of people have told me that, oh, you're crazy to put it on, you're never going to succeed, but I believe we will succeed, and I think it's going to be a fantastic event. So I very much look forward to it. So if you go to winnipegcryptoconference.com and put in promo code WAM, WAM, you will get a 10% discount code. So we'd love to have you out and chat with you. Both me and Josh and Tim will also be there. So it's going to be a fantastic time, fantastic speakers, and really great content that will help you, step up your level and understanding of the future that we're moving into. We were talking about cashless. Blockchain is a part of that, but there's a two-sided sword of the decentralized, power to the people, and then centralized, Chinese and all the other blockchains that are out there that are made to enslave us.
Yeah, so check it out, Winnipeg Crypto Conference. But I'm Tipicho, along with John Snyson with World Alternative Media. Find the truth, be the change.
Okay, good.
Cool.
Yeah, so Tim, if let's go back to the stream quickly before we do the next video and do a little bit of Q&A here and see what kind of questions we got going here.
Yeah, we see Silver Daddy. Daddy Silver says, "Hey, John and Tim." Hey, Silver Daddy. We got hello from Kesha and Daniel from the beginning. We got some people reading Creature from Jekyll Island, which you always like to hear. Hello to Dave Bongo Slide.
Yeah, very pleasure having you on. Let's see here. Hello from Switzerland, the country of chocolate and banks. Actually, yeah,
and
Switzerland,
tulips.
Because of negative interest rates in Switzerland. Just a fun fact, people are stacking cash in the vaults because they don't want to have them in the banks. Actually, I want to thank Tao Jones for our soup. Really, really appreciate it. You make our life more easier by funding us, and so we're able to put out more of this great content. And then he also gives us a second one. We really appreciate that. Thank you so much. Here, it's for like you guys that are actually keeping us running and making us passionate. Because if you guys want our content, it's just such a honor to actually get be able to put that out, but also be able to see an appreciation that people really like our content by a monetary contribution. It's really great. And he said here on the last one, he said interest rates are a joke because fiat is a commie joke. Well, yeah, central banks is a branch of communism. That's what it is when you centrally plan the money. So I 100% agree with you, Tao Jones. There, you're spot on. You really hit that one on the nail on the head. Tim, is there any other questions or anything that we got on the live stream?
Right now, I'm trying to fix the thumbnail, so sorry for Josh. Because it's weird because I put the thumbnail in the preview video, but then I don't think I used that RTMP feed. So for you guys that don't know all this, it's weird because I'm using Wirecast to stream out, but then I uploaded everything ahead of time into YouTube, and so it looks like now I did originally put it into the original YouTube upload, but apparently since I didn't use that RTMP feed, all stuff you guys don't care about, it didn't have the thumbnail, but we got that fixed now, hopefully. So sorry, Josh, about that, because he was messaging me. He's like, "What's happened to the thumbnail?"
Yeah,
so,
and actually, if you guys want to chat with Josh, he's on our live stream as well. I can see, so he's totally on there, following us, answering questions with people that are sending us questions. So that's really great. Let's see here. I'm in Liverpool, England, and my question is: do you think the banks in the city of London will put interest rates to push us for Brexit? I don't know. I'm not exactly sure what you mean by that, but I assume you mean into negative interest rates. Well, first of all, anybody need to exit out of the European Union. It's a massive conglomerate of elected officials that they claim that, oh yeah, it's a massive trade union. We're create like we're a trade bloc, so we're able to give you a better deal. It's like the unions that are out there for big corporations that say that, oh yeah, we're here for the everyday person, so they have something to say for themselves, so they don't get run over by the big guy. It's exactly the same thing. I really despise unions because they really impede development in corporations. They really they have their time. If you have a tyrannical boss, you could create a quick union and then organize and then stop him from being an idiot running the company and terrorizing people. And then when the job is done, you should solve that organization, that union, right away. You shouldn't keep it around. That's only what it's for. It's for people to actually be able to unite and then stand up against people that might be doing something that's not right against them. But then you shouldn't be running it anymore, because what it creates over time, it creates another government institution basically that are used for corruption. They suck a whole bunch of money out of the general person that's in these unions, and it's a big time strain. So I think what's going to happen with Brexit, I don't know with the banks. Of course, he was mentioning the city of London in capital letters, which is of course the inner city of London, where they have their own ruler that actually
even the queen has to ask for permission.
Yeah, exactly. And what they actually use the city of London to then and being used for sinister activities through the banks and so on. So it's the evil of the banks are always around, and we should have a tax-free society where you voluntarily contribute to your society with the money that's needed to actually bring a product forward, create a road, or having a hospital service, or whatever it is. You should really put that money forward voluntarily, and you shouldn't be enforced by the legal tender law that the government has and all that really pushes you into this totalitarian regime that always ends up happening when you start taxing at the the one end, and you think that you're going to have a small government, but over time people get lazier and want the government to take over more and more activities, and at one point suddenly you sit there with a totalitarian regime, like for example China or the United States is a totalitarian regime. Same with Canada, where they just have mass control over people, and they're not there for you. They actually just substituted themselves in a feudalist system where they took away the kings and queens, and now they just have political elite that's running the show instead. So it's always the same there. But I think that Brexit, is I can't wait for it to happen. The havoc it's going to cause on the European Union, because they're scared. Because the Brits, they put in 13% of the total budget for the European Union. So now Germany, France, and other major nations will have to opt their percentage 3-4% more in contributions, which they don't really have. Most of the European Union is a negative interest rate that we're just talking about. So it's a big problem here, Tim.
Yeah, right now we do have a question too of why we don't talk about Ripple XRP, and so right now what I'm doing is I posted a 2-minute rant that I did almost at the peak of Ripple. I think it was like January 3rd, just did a Facebook Live on it, and
and actually, Tim Ripple as well. Actually, the Bank of Canada through Project Jasper 3. Look that up online. There's not very many people talking about it, but they actually use the Quarter-2 blockchain, which is the Ripple blockchain as well.
And we did a video on that. So.
Yeah, exactly. So please look up on YouTube Project Jasper, and you'll find a in detail video on the actual project and the decentralized ledger Ripple-based system that Canada has. Actually, there's another system. We were talking about cashless systems, like China is just basically said that they worked for 5 years. They built their cashless system right now. So they have it, and then of course Canada has it, but also the Monetary Authority of Singapore, they use JP Morgan's blockchain, the Quorum blockchain, to do their transaction in their system, banking and central banking system. So all of these cashless
Hi everybody,
systems, they're very close. The Fed is really lagging after. They're saying year 2023 and what was it again, Tim? I think it was 2023ish when they plan to maybe have it available. So they're like really far behind technologically wise there of the other central banks, because this is, as I said at the end of the actual report that we did, I said that we have a two-edged sword here, a blockchain that's for the future, these decentralized currencies like Bitcoin, Monero, all these other ones, versus the centralized chains that are the Jasper project, the Project Juniper of Singapore. All of these guys, they have their systems already ready to go. They're just waiting for the right crisis to make. As Rahm Emanuel said, don't make a good crisis goes to waste.
Yeah, right now we do have your. I have it pulled up. Actually, not as a lie. It's not right now because I did have it a little while ago. But I just linked down below the Bank of Canada's plan to enslave you, the Jasper project
Awesome.
video that we did a little while ago. So make sure you guys check that out. What other? We've got questions about monetary and also I want to make one more thing about Ripple. So probably the best thing to do is just watch that 2-minute video. But because the problem is so much of the stuff that goes on, I've already forgotten so much stuff. And so with what happened with Ripple at a super high level is basically it's the antithesis of cryptocurrency and Bitcoin. So Bitcoin and cryptocurrencies were meant to basically have decentralized organizations or decentralized entities help free the world, where you're getting rid of centralized control. And through something like Bitcoin, what happened is you had the original Genesis block, and then you had people who were then mining the blocks. And so with Ripple, what happened is you had the Ripple Corporation, whatever they call themselves, who basically in one fell swoop created 100 billion Ripple. They kept, I can't remember the exact percentage of it, like 50-60% of it, maybe somewhere between 40 and 60% they kept. And then one of the guys who then kept it, who started Ripple, was, I believe it was Jed McCaleb, or I can't remember if it was him or the other guy. Anyways, it's all in the video, and I'm taking more time to explain this than if you just watch the video, because at the time I knew all this stuff bulletproof. But it was the guy who basically started Mt. Gox. He sold it, and when he sold it, they had already basically had all these gigantic improprieties there. And so essentially the same guy who helped almost kill Bitcoin with Mt. Gox then went over to Ripple, and so I've got a little bit of a problem with that. But it's ultimately they're working with the banks and helping create the cashless society. Not to say that they aren't that it isn't a good investment or that it won't go up in value. But you also have to remember there's 100 billion Ripple, and so when you had people calling for $10 Ripple in January of 2018, which they were all doing, and I was talking about it in the video, people are calling for $10 Ripple, which would be $1 trillion. And so people are calling for $1 trillion corporation to be worth more at the time was about the same as Apple and Amazon and Microsoft, and for a company that at the time it was completely unproven, hadn't done anything. And I said that everyone right now who's calling for $10 Ripple, I hope you guys lose all of your effing money, because what you should be doing is selling right now. And it was all in the video, and I just posted the link. And if you guys did sell, you would have saved yourself a lot of money, even from pure emotion. And I just think people, a lot of newbies, what they don't realize is, hey, there's 100 billion Ripple versus 21 million Bitcoin, and a lot of people come into this and they think like, hey, how come? If this only got to be a fraction of what Bitcoin is, if it's $1,000, then I'll be sitting on, millions of dollars when they buy tons of Ripple. So one of the reasons why I haven't been making as many videos is if you guys head to, let me just pull it up right now on the screen. If you guys head over to thelibertyadvisor.com, not to make a quick shameless plug over here, and I've got so many mics and stuff in front of me, I'm trying to peruse my screen. But if you guys head halfway down, you've got one section over here on self-directed. Actually, if you just go to the crypto section up here, you've got basically two different spots that says, hey, did you get into Bitcoin early and are looking to cash out? If you guys click on that, there's all sorts of different great pieces of information, like the top 10 things you should do before you cash out your crypto. Just tons of, this is information that can save you, depending on when you got into Bitcoin, potentially millions of dollars. Basically for every $1 million, we're saving people close to $250,000 in taxes with these strategies. But it's only good for people who got in early. If you didn't get in early, looking to put any in your IRA, even if you aren't, you're in Canada and you don't have IRAs, there's still a whole bunch of great information in here. So if I scroll down all the way to the bottom, I've got the 10 most important factors you should consider when investing into a cryptocurrency, the 10 most common questions investors have regarding crypto and their IRA, the 6 biggest mistakes crypto investors make. I've got a presentation on Roth IRAs and the best way to get yourself into one of those. I also have information on the 9 most common mistakes investors use within self-directed IRAs, and then I've got 75 alternative investments that you can make. Just to give you guys a quick, shameless plug on that. That's obviously, we can't rely on YouTube for salaries, and because with all the shadow banking that's going on, so we have to be entrepreneurs and help create our own businesses. And even if you don't do business with us, there's a ton of great information. Maybe you get some valuable nuggets out of it. You can share it to somebody else. This is ridiculously good information, at least in my opinion. But right now, John and I probably need to strategize for what the next video is going to be on, and I'm thinking probably, do you want to talk about Trump calling for 100-year bonds and trying to stave off what might be coming with any potential economic collapse?
How about, isn't he so confident? How about we just do 1,000-year bonds or 1,000,000-year bonds? Who cares these days? Like, it's he might as well go all in and create something stupid. If it's not that stupid to put 100-year bond out, but why don't you just really tell people exactly what's going on with just going, we're just gonna create a 1,000,000-year bond, negative 15% interest rate. How about that? Showing the monetary insanity. I recently was interviewed by the Silver Doctors, and Mike there were at Silver Doctors, and the video was titled, have we reached monetary insanity? Which we definitely have with negative interest rates, with all this quantitative easing, all these programs that are just little band-aids on a completely flawed and failed system that is crumbling slowly underneath our feet.
Yep. Okay. So actually I do. So let's just go over let's talk about some of the articles that we'll be talking about quickly. We've got here come 100-year U.S. Treasury bonds. This is actually from December 2016, which I did comment on this on my Trump Effect presentation that predicted basically everything that has gone on from Trump. I sound like a complete jerk saying all this, but I'm right now in the middle of making a little highlight video of stuff that I said 2 years ago and how it's, basically, Trump should just fire every one of his economic advisors and be like, hey, just watch my podcast for free, and you'd actually know what's going on, along with you guys as well. You guys have been calling everything. Then we talk about it's official. Trump makes first demand for Fed to restart QE. This is from a couple days, 3 days ago. I think he actually did that a few months ago, but oh well. More fake news from mainstream media. Got the Treasury's about to flood the market with $1 trillion of debt. So obviously that's a reason why they need to start talking about QE. You've got Jerome Powell is issuing a gag order on Federal Reserve officials talking. We've got the White House eyeing payroll tax cuts in an effort to reverse a weakening economy. And then blah, 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 blah. I'm looking at more stuff.
And also talking about I have the syndicate there saying that in pre-capitalist England, they issued bonds to fund their wars with no maturity dates. Yeah, exactly. Because when you don't have actually a free market, you could just create bonds with a limited amount of time to pay them off, so you never have to pay them off. Of course, that works out fantastic if you don't have anybody that's actually has any reason for paying that money back. That's perfect. Keep on doing that. That's actually what we should do today. Trump, come on. Let's just issue a bond with unlimited term on it. Never.
It's sort of like if you're going to make the minimum wage $15 an hour, why don't you just make it $1,500 an hour? I mean, obviously $1,500 is better than 15 or 20.
Well, yeah. See, this is the thing.
Well, let's say some of the good stuff. Let's say some of the good stuff for the show. So if you want to do the intro for this, and then mention that Josh is over in Europe right now, and we're sort of filling in, and
and he's kind of like I think Josh might be off and on to our stream there, so he might be on. So if you have a question for Josh, you could actually ask that as well. So Tim, I assume we're doing the actual Trump video right now, right? Where we're talking about the 50-year bonds and 100-year bonds.
Yeah, I do have that article ready to go.
So what we're doing here, the reason why we're a little bit weird here with our live stream is we're actually breaking these up for people to watch after. So we're doing 2 separate reports that we're doing here right now, so people can take and watch, report by report. But also we want to have the live stream, so we actually, you can see how we're doing all these reports, and you actually are able to ask us questions after every report as a bonus as well, which is great for you guys. So you can actually not only be able to see the report, but now you actually get to interact as well and ask questions after. But yeah, let's get going with the next report here. So I'm gonna get started. Hi everyone, this is John Snyson here from World Alternative Media, and today we're joined by Tim Picciott out there in Phoenix, Arizona, and we're gonna talk a little bit about something that a certain guy, the Orange Man over there in the United States, was airing about 50 and 100-year bonds, and I don't know which nation was it that recently we're talking about 100-year bonds that is not doing so well. Argentina. Well, of course, they might as well, put a unlimited bond, a limited term on the bond, Tim. That's they might as well do that. It's just stupid to say 50 or 100 years. They know that they're bankrupt. They might as well just let the public know how bad it is and get it over with. Stop, giving life support to this, Tim. And Tim, if you can get into the article that you have there on what Trump exactly was saying about, issuing these bonds.
Yeah, hey guys, this is Tim Picciott with World Alternative Media and the Liberty Advisor right now. So what we've got is an article that says U.S. weighs selling 50 and 100-year bonds after yields plummet. And basically they see that now that we're at an all-time low in at least on the 30-year yield, they're like, well, hey, why don't we stop at 30 and why don't we just keep going from there? But one thing I do want to mention, though, is here's an article from December 3rd, 2016. Here come 100-year U.S. Treasury bonds. And what this is in reference to is the Treasury Secretary Steve Mnuchin, obviously former Goldman Sachs, was talking about how, we needed to have, 50 and 100-year bonds, and basically how, stupid it was that the Obama administration was having all these short-term bonds, and, only an idiot wouldn't lock these in for longer. But the problem why you can't lock things in for longer is that we are a deadbeat broke nation that can only afford, paying basically nothing to hold on to our debt and have that debt mature and roll over. Whereas, even if you wanted to all of a sudden have a 50 or even 100-year bond, and let's say we were in a late 2017 situation, what would people pay for that? Probably 5, 6, 7, 8, 9, 10%, which means the government is going to have to come up with what, $2, $3 $2-3 trillion in order to fund itself. No way that's going to happen. So what actually ended up happening is instead of the average debt, which I don't have the exact number right now, but if you look at the average debt of the maturities of the treasuries, not only did they not go to 50 and 100-year bonds, they actually decreased the maturity of their bonds because this is all an interest rate play, which also makes America very susceptible to changes in interest rates because we've got just what load of rates that are constantly having to be turned over. And when those rates are turned over, then they are susceptible to what if the Fed loses, or not what if, when they lose control of interest rate situation, and now they need to start re-upping at much higher levels. Basically, America is done at that point. I mean, basically overnight, the interest can explode. And some people will say, well, the trigger could be China selling all of its bonds. Well, China doesn't even need to sell all of its bonds. All China needs to do is hold on to their bonds for, probably 2 to 5 years, and the majority of their bonds would just roll off the balance sheet. But what we're seeing is the complete zombification of before certain companies. Now it's actually turning to the countries because these countries cannot afford to sustain themselves on the debt loads that they have. And now you're even getting, Trump talking about, potential payroll tax cuts. So I'm going to get this up here on the screen momentarily. But I think what happened is the White House denied this. Then Trump was talking about it. And I think now he's back to denying this again. And what they're talking about with this is for someone that's self-employed like myself right now, I not only have to all set together the Social Security and FICA taxes and Medicare taxes before even I pay federal or state income tax. I've already got to have 15.3% lopped off right from the top. And so what Trump is talking about is having it go down to like 6, instead of it being right now like 7 point something percent. He's talking about having it go down to 6.2%. And at one point, I don't know if he's actually talking about what percentage they would make it, but at one point during Obama administration, they lowered it down to 4.2, which was awesome because when I first started working, then I was only paying 8.4%, and now it's jacked up to 15.3. But it's funny that is only going to add to the deficit which is fine by me. I mean, I'd rather have less money robbed from me for Social Security I'm not going to get anyways. And so that's what they're talking about with the payroll tax is it would be I believe that would be a massive benefit. And during the original tax cuts, that was what was initially floated, and that was the initial plan, along with pretty much gargantuan amount of tax cuts for lower middle classes. And I did a podcast way back when talking, or maybe it's just been a Facebook Live at the time, talking about this, probably before I even had my podcast come out. No, actually, it was during the podcast because Trump was obviously president at that point. And so what had happened is I thought that was an amazing plan they had coming out. But then the plan that was actually passed was basically geared toward big Fortune 500 companies and fat cats. And yeah, there was some crumbs for the average, proletariat or plebeians out there like us that get, the crumbs that are left over. But the majority of the tax cut ended up going to, the ultra wealthy, which, is not going to bode very well for the president. So, okay, great job, Trump. You gave it to all the people that hate your effing guts are the people you gave the tax cut to. All the big Fortune 500 companies are the ones who benefited. They used that money to then buy back their own stocks, and then they had less stock outstanding, which then increased their earnings per share. And so pretty much everything that we've seen from the S&P 500 going up has been recently just been through multiple expansion, which means fancy way of saying people just paying more money to getting the same thing. Almost none of it has to do with earnings going up. Almost none of the earnings of over the past 10 years growth has to do with earnings. Almost all of it is just multiple expansion, earnings per share expansion by companies borrowing money to then buy back their own debt. And so now if you can borrow money at negative rates, buy back your own stock, you're a CEO of a company, and now your compensation, because you get paid $1 a year, and your compensation is tied directly to your stock, you can do a lot of things in the short term to boost that stock price. So Trump, I think, is absolutely wrong in trying to pin everything on his presidency to do with the economy, because this economy was dead from day one. The first podcast I ever did, please guys go check it out. You guys can go to thelibertyadvisor.com, upper right hand link, it says show. Check out the very first one was warning everyone that voted for Trump, including myself, of saying listen, Jesus could not save the Federal Reserve right now, could not save the economy right now. He needs to let things go down, and this will be blamed on, socialism, the Democrats, what have you. I mean, I'm against both the parties. I mean, I own, several domain names that are against the parties that I'm squatting on right now, so believe me, I'm not, cheering for one of these sides. But what was happening is all these Republicans then started taking a victory lap. They started saying how great things were going to be, and then it created this self-fulfilling prophecy, excuse me, where the great news ended up meaning that the Fed lost the excuse to cut rates, and when the Fed lost the excuse to cut rates, then that pricked the stock market bubble. Then when the stock market bubble popped, then the Federal Reserve said, oh man, this 2.25% Fed fund rates, that's way too much. So then now they're talking about having to cut it. Donald Trump is talking about having to cut it back down to 1%, which if you guys remember, 1%, and let me pull this up here on the screen, 1% was the level that Alan Greenspan cut it down to after the dot-com bubble. And now you've got Trump calling for the rates to go back down to 1%, which is absolutely crazy. That what ammo are we going to have once we actually are in a recession? So we can do a lot of things to delay the day of reckoning. Ultimately, we're just going to make the day of reckoning much worse. And the worst thing that's going to happen is now the so-called free market, which we don't have, is going to get the blame. The conservatives, which also, they're not conserving anything, in my opinion, except for the status quo and even getting more debt, they're going to get blamed. And then so the next round of people that come in, whether it's 2020 or 2024, are going to be hardcore socialists, which is a good sign for Bitcoin, a good sign for other things. And this is something that we've been calling out from day one. I had a presentation called The Trump Effect and Why Good News is Bad News before he even got into the office. And so we are not Monday morning quarterbacking this. And to see now, people even, the White House and mainstream media talking about potential recessions, it's crazy. I mean, it's all the stuff that we've been talking about, for the past 2 years or even longer. And now even the mainstream media is finally, acknowledging this.
Yeah, no, of course. Well, let me get back to the 100-year bonds and the craziness of this, because let me just mention, in 2017, Argentina sold $2.75 billion worth of 100-year bonds in U.S. dollars. Of course, they were stupid enough to issue it in U.S. dollars. And now, of course, with the just a couple of weeks ago, where their peso, dropped 30% down in a day in value, so people lost, let's say that you had 100,000 in your bank account, then suddenly overnight you only have $70,000 worth of purchasing power at the end of the day, and that is how substantial that drop was. Now, of course, those 100-year bonds that was heavily oversubscribed, $2.71 billion worth of U.S. dollars. Now, I believe probably you'll see Citibank and other banks are actually holders of those bonds in their funds and so on, and there are probably a whole bunch of pension funds pushing their poor investors into this, on top of having negative interest rates. You're getting the worst of two worlds. They're having negative interest rates bonds, and then you're getting a 100-year bond from Argentina that, of course, it has dropped substantially. Tim, if you could pull up the article that I just sent you on Facebook Messenger, it's a Quartz article that shows, there's a chart there that shows the 100-year bond actual price valuation, and as you can see, it's actually have substantially dropped over the last, just since about October, I would say December 2018 of this year. It actually have plummeted, and now just over since the currency devaluation, you've seen the value of the bond drop about down to 54% of its actual value. So that those bonds, they're in for whoever invested in those bonds. I don't know if what they were on, if they maybe some Wall Street bankers that have snorted too much cocaine or whatever it was. It was a terrible idea to get involved in any 100-year bonds. And of course, after this is the interesting thing. So we're looking at the history of empires, and Josh is putting out a video on the Roman Empire versus the US
and we
Empire.
do have this pulled up right now on the screen. So we do have the Argentina 100-year bond pulled up right now.
Yeah, exactly. Just look at that. But when you look at the insanity of 100-year bonds, so let's look at history. Well, the United States has already been around for 98 plus years as an empire. Well, you're looking at the average, lifespan of an empire. It's usually just 110 years at the max. That was the British Empire, the last empire that was really big. But then before that, of course, you had the Spaniards, the Portuguese, and so on. They were between 100 to 80 years that they survived, and that they were a dominant currency. Actually, the Spaniards, their silver currency was based. Was one of the
Richard, you
bases
were
of how they
there.
traded in the
I was
United
there.
States in the initial phases before they, created the
Sure.
Are you taking
Continental and
credit
printed
for
themselves into oblivion
this nearly
several times and having
200%
more central banks after they tried to get their independence. And then, of course, the different dynasties throughout China. It's very interesting how that time frame, Tim, is. It's usually between 70 to 120 years. That is the time frame of an empire, and what you see is they actually live and die with their currency's purchasing power usually, or their coinage purchasing power. When you talk about other big powers throughout time. And of course, back in the day, they were able to live a lot longer because they couldn't just print mass amounts of coinage without people coming in the way and say, like, this is BS. They were slowly throughout time debasing the currency. Well, now in the modern days, we could debase currencies super fast, which we did just over about 30-40 years. And then on top of that, we have paper currencies that we could print. Well, actually, now we get electronic currencies that we can just print into oblivion within seconds. So it's the way we've gotten, to how fast an empire can, raise or fall. Like, look at China, for example, how massive of a raise they had of their new empire. Their Xi Jinping empire that's up and coming there. But the problem is they base it upon the debt system again that they did in the Sung Dynasty in 1024, and of course that debt is gonna come and really bite them in the back. They of course built their empire upon the U.S. structure, where they have their Asia Investment Bank that they use the Belt and Road Initiative to go and borrow money to Pakistan, to a whole bunch of other nations, Zambia, and so on. And then what they do is they build infrastructure, but the problem is that the countries can't pay for their infrastructure. It sounds familiar. It's like the IMF, loan sharks, and then they can't pay it. So now they just recently took over I think it was a hydro company and the airport in Zambia. So you're seeing the same activity, the same corrupt activity used by the Chinese empire, and people believe that the Chinese empire will be around for so long. I think they'll, be able to go at it a little bit longer, but the problem is they printed so much money as well that, they have bank failure. They recently had a major bank getting taken over by the government because I think it was the third or fourth biggest bank over there. So you're seeing all this printing of debt is just coming throughout history. It's just really falling apart when it comes to the whole monetary system, and then issuing, like, going back to the longer year term bonds, is the trust in that a government is going to be around for 100 years. That's insane. I wouldn't trust the governments to be around for maybe more, like 5-10 more years. But actually, I wouldn't trust the government in the first place. But that the governments will try to be around for another 5 to 10 years in the current structure, I totally believe that. But they're gonna try to do whatever they can. We were talking about in a report about negative interest rates and cashless. They're going to try whatever they can and do to funnel you into this slave grid, which the creation of mass amounts of debt and people investing that money into nothing of value. That is a huge problem that they haven't financially educated people in the school system. That's Robert Kiyosaki talking about that. Really have destroyed society, and it continues to do it because people are uneducated and they don't know the history of how money is put together, how money works. So I got a couple of really good books on that. One is The End of Freedom: How Our Monetary System Enslaves Us, and the other one is called Canada, the Greatest Economy in the World? Because there was an article in 2014, I believe, that said that Canadian banks are the greatest in the world. Canada is the strongest economy that in the world. And then, of course, I was talking about the debt problem that was underlaying that. I said this is going to implode, and now, of course, Canada is officially number 2 or 3 in the world of a massive real estate bubble in Toronto and Vancouver. They also have massive amounts of debt. Here in Manitoba, we actually have the highest credit card debt of all Canadians. So you're seeing this debt bubble that we built, and we've lived upon this system. It's the same as the Sung Dynasty that created, credit and then created what was called the economic boom back in 2024. It's the same exact, cookie cutter thing, just in a modern way that we're doing, misusing the fiat currency, overprinting it, and destroying the value of it over time. Meanwhile, the elites, keep on buying new assets on top for next to nothing in interest rates. Meanwhile, people are stuck with 19 to 23% on their credit cards that they're buying crap things with, that they're not, investing or doing anything, because you have to invest today, and if you don't invest, you lose money, because inflation is there, and the inflation is the printing of currency. So you really need to understand it and actually be on forefront, because if you just sit there with cash, even with a negative interest rate system, you'll still lose out big time. And it's so important to understand money and economics and how it all works today, because if you don't, you're going to get eviscerated, unfortunately. And that's what World Alternative Media and me, what I've been trying to do for so many years, like almost 10 years now that I've been at it, trying to educate people and getting them to understand the true construct of money, and what that is in the philosophical state, but also the whole structure, so they could actually be able to use that system for their bettering them, their own position in it, but then also protecting themselves against an eventual failure of that system too.
Yeah, and one of the things, while we're talking about different resources for people to kind of catch themselves up to speed, I'd highly recommend James Corbett, The Century of Enslavement on YouTube. And actually, I mean, we think we've got it bad in terms of shadow banning. You can type in Century of Enslavement, and guess what? You'll see some of his videos, but it's not actually from his channel. So you used to type in Century of Enslavement, and it used to just pop right up with James Corbett. There's not a single one from Corbett's channel. So this video is, it's not. It says, so we got one video from James Corbett, but it's not even that one on here. You can even go a step further and type in Century of Enslavement. Now, some of these videos are the videos. So if you type in here, it's just other people who've posted it. But then you go to type in his actual name, and so Century of Enslavement, James Corbett. You still do not even get James Corbett's own page on here, which means it's a really good video if they want to stop it and stop the feed from showing it. Because what used to happen back in the day, you just type in Federal Reserve, and James Corbett video was the first one that popped up, and the powers that be were like, hell no, we can't have that happen. So I highly recommend that. Also, Mike Maloney's Hidden Secrets of Money Part 4, I think, is mandatory on this. I know a lot of people right now are commenting about Mike Maloney right now on the feed, but I'd highly recommend Hidden Secrets of Money Part 4. It's about half an hour. Make sure you're not doing anything else while you're watching it, mainly because there's so much stuff going on that if you're not used to the stuff, there is a lot being thrown at you really quick.
Yeah, watch it 10-15 times.
And then share it. I can't even tell you how many. And I actually do have a video somewhere where I'm talking about the Federal Reserve as well, so I'll try to link that down below, where I incorporate that video, probably the best 2 or 3 minutes of that video into there. And I guess we're keeping along with all these 100-year debts. I mean, one of the other big things, and I know I've mentioned this in the previous video, was talking about interest rate risk and what happened with Argentina. So if you have a 100-year bond and rates go up 1%, you almost lose 100% of your principal, which means you're locked into holding that bond for 100 years. Because if rates go up 1%, 100 years, 0%, rates go down 1%, you basically lose 99.99% of the value. So if you need to sell and you can't hodl that debt, then basically you're screwed. You're pissing away all of your money. So the risk-reward ratio, well, there is no reward. You're at zero or negative. There is no reward. It's absolutely crazy. With most of these, and then even in America, where there is some nominal yield right now, but it's probably negative once you factor in, or it probably would be negative once you factor in what the real rate of inflation is. Yeah. And so it's just absolutely crazy what's going on, and I can't believe we're even at this situation, because when people are like, well, when do you think it will collapse? I'm like, I don't know. Thought it was going to collapse 3 years ago. But then they keep pulling all these rabbits out of their hat. And I have made provisos of, when the things go down, then the other central banks will keep printing money and they'll keep pulling rabbits out of their hat. And one of these rabbits is, okay, we're going to do the payroll tax and lower that, or else we'll go and throw another bone. Like, they have all these different Hail Marys, but ultimately there's no way to save the system. Donald Trump, really is his own worst enemy by talking up the system, because by talking things up so much, it then caused the Fed to be like, why, what excuse do we have not to raise rates now? And I'm talking like as if I was talking a year ago. If it's the greatest economy ever, we can't handle 2% rates. 2.25% rates. I mean, why can't the greatest economy ever handle that? And if we can't start trimming the Fed's balance sheet now, then when the hell do you expect to do it when we're not in the greatest economy ever? And we're already going to have over $1 trillion deficit this year, something I was talking about 2 years ago, predicting that Trump would have usher in $1 trillion deficits. And I've got some pretty funny clips when I was on certain right-wing shows talking about that, where they're saying, some people actually bet me some money on that too, so I doubt they'll end up collecting on that. But it's just complete insanity that we are now talking about negative interest rates. We're talking about 100-year bonds. And it just shows you that we are at the end of the ropes. We're at the end of the system. Right behind me, it says King's Ransom. The reason it says King's Ransom is to start a conversation with people, let people know we're using the King's money. We're using the man's money. You take a look at your dollar bill. It says Federal Reserve note. Note is a debt instrument. It's a bond. It's an obligation. We're holding debt in our pocket, not even holding onto what is real money. And then it says Federal Reserves, whose note it is. It's the Federal Reserve's note. And so they created money out of thin air. December 23rd, 1913, they issued their first dollar. That dollar had 4% interest rate on it. So how do you ever pay back $1.04 at the end of year one with $1? Well, you can't. So you've got to borrow another dollar and another dollar and another dollar. And so we're in a situation where we're at the end road of capitalism when negative interest rates are destroying capital, and they're one way or another, the system is going to implode, whether it's through inflation or deflation. Really doesn't matter to me, but I will think long term that this will be good for a lot of other assets. But if you're a retiree, that's where you've got a lot of things to worry about right now, and I wouldn't want to do this on my own or just try to go with whatever's the cheapest option out there right now. And maybe I'll link my Anarchapulco speech down below while it's still up there on crisis retiring, that is basically geared towards all the issues that people may have. But I think for now, I mean, that's probably, I'm sure I could keep rambling on this subject for now, but 1,100-year bonds, it's something that I know they were talking about it in 2016. I said it's never going to happen, but now that the yields are way down, maybe now they feel more emboldened. They're thinking, okay, maybe we can lock it in. If everybody else is negative, maybe we can lock it in 100 years for 2%. And if you're Mnuchin and Trump, why not? People are dumb enough to borrow money for 100 years. Rates go up 1%. They've already lost all their money, and and then they're forced to hold on to that debt forever. And so that's what you've got to get yourselves acclimated with. The term interest rate risk. That's where rates go up 1%. The value of the bond goes down by the inverse of the duration of the bond. So you have a 10-year bond, rates go up 1%, underlying value goes down by 10%. You have a 100-year bond, rates go up 1%, boom, thank you for playing. It's like the South Park clip, and it's all gone. Because that's, at that point, you might as well put your money into Bitcoin because, 100 years from now, Bitcoin's probably going to be around, but guess what? 100-year Argentina bond or German bond or American bond, by the time you get your money back 100 years later, well, A, you're going to be dead, and B, all the horses are going to be out of the barn, and it's not even going to matter. So I don't know if you want to take it away from there, John, about just how crazy all this is.
No, instead of 100-year bonds, invest in raw sewage that has way more value to than these paper assets that are fake, that are printed out of nothing. We gotta start seeing through this whole charade that this monetary system is, and how they constantly keep on tricking idiots into investing their life savings into their Ponzi scheme, because that's what it is. It's basically a Ponzi scheme, and we're hitting peak debt, where you see all the debt saturation, as I called it, is at a maximum high, where when you actually in the current fiat monetary system, when you print money, when you take a loan out of the bank, you actually get that money, let's say 100,000, but then you've got to pay an interest on that. That money doesn't exist. The actual $100,000 didn't exist, but it actually exists on the ledger right now as a $100,000 debt on your book that you have to, a liability for yourself that you have to pay back. But then on the other side, the interest does never exist. So you got to constantly have to add more and more debt on top to pay off the ever increasing interest, and the interest never stops increasing. And that's the problem. And now we're at a point where they're just paying interest, and you're basically, if interest rates were to jump to 3 or 4%, the government would be bankrupt. How could they ever pay that amount of money when they're struggling now? And if you go to the U.S. debt clock, they just with the current outlook of where they're going, they're looking at $3.5 trillion deficit in 2028. They're looking at $58 trillion in debt, which is over double of what we have now.
And that's assuming
yeah.
we have no recessions between now and then. I think the
Oh,
CBO
exactly.
the Congressional Budget Office, is modeling no recessions between now and 10 years from now, which is absolutely insanity.
Well, yeah, it's complete insanity, and that's what it all comes down to. We live in a monetary insane world where the deranged, mentally ill, PhD economists that think that they can manage the economy. Meanwhile, there's 6, 7, 800 examples throughout history that tells them that they're wrong. They're basically mentally ill, that they believe, and deranged, that they actually believe that they could make a difference now, and it's different this time. They gotta have to pick up your history books and start reading monetary history past the last 90 years and backwards, and then maybe you could understand a little bit about more what's going on, instead of trying to have these idiotic policies like 100-year bond, 50-year bonds, and negative interest. It's not going to work. It's all going to fail. And Tim, I think that's it for this report.
I do have the U.S. debt clock up, and what's interesting is I don't see where it has unfunded liabilities per taxpayer, because I know it used to have that as a line item.
Yeah, no, it's it's at the bottom. It should be unfunded liabilities, and I actually checked. I think it's $123 trillion. That's the official number, anyway.
Well, it's 125 now, so you're a little off.
Okay.
It used to have unfunded liabilities per taxpayer. So it has liability per citizen, but realize that most of the citizens aren't paying into anything, which I don't necessarily see as a problem. We should get to 100% not paying in. But for right now, that number, I believe, probably 10 years ago when I was first started covering this, it was close to $1 million. I think it was actually a little over $1 million per taxpayer back then.
Yeah, and it's more now, and it just keeps on increasing, and then you have debt on top of that. So it's just a non-ending Ponzi scheme that you can't keep alive. And of course, when you can't get more people in at the bottom, which is basically, remember how I was explaining the banks, you go into a bank and getting a loan. When that, bottom level feeding the Ponzi scheme disappears, the whole Ponzi scheme falls apart, because there's nobody to pay the guys at the top anymore. And that's what's happening here. That's what we're seeing is, it's such a textbook example of a Ponzi scheme, but it's like, it's mad, the actual, how they got away with this Ponzi scheme that's basically on a global level. It's insane. It's like, it's Bernie Madoff. He looks like, a little guy that, doing card tricks on the streets.
He looks like a choir boy. And actually, I do believe there is a quote from Bernie Madoff where he talks about, hey, what the government's doing compared to what I'm doing is child's play.
Before we end this, I saw an article about, I think it was a guy that worked with Bernie Madoff or something before, that actually came out and said that, GE is worse of a
that was Harry Markopoulos, who he blew the whistle on Enron, I think. Blew the whistle.
So but he came out and saying how
he blew the whistle on Madoff. He's
way worse.
Yeah, and there's a documentary, I believe, where it's like Chasing Madoff or something, where he stars in it and shows like all the proof, and he gave the proof to the regulators. But Madoff was, at the time, I think at one point was, the head of the NASDAQ, or like super high up in NASDAQ. So he was connected, sort of like a Jeffrey Epstein, where the ultra elite have their own rules. And that's a whole other can of worms. And one thing I did have up while you were trying to wrap it up, and I kept interrupting you, was I've got the U.S. debt clock, and then I showed the gold reserves per country. And what's crazy is if you take these numbers of, like, even if you believe the official reserves and then believe that they're not actual tungsten that's in there, you take a look at it, and then you try to divide it by the amount of debt or the amount of liabilities, and you start to see that basically it's just a fraction. I mean, we could run our government basically for like a month or two with the amount of gold that we have. It's just absolutely crazy when you start to price things in assets like gold. And so this is all a big Ponzi scheme. It's all going down. We're here documenting this ongoing financial collapse as it occurs, and that way they can say there wasn't at least a few people out there who did see this coming.
Well, yeah, and before the U.S. empire falls, all the subsidiary currencies that are under the world reserve currency, the U.S. dollar, will fall as well. And I believe they'll probably fall before the United States dollar. But then it's again a trust game. You could like guys like Martin Armstrong believes that U.S. dollar will still get strong after that. But the problem is, even though if you have the U.S. dollar as the one reserve currency left standing, people still lose faith in that because they saw the other currencies fail. Like, why are we going to trust this US dollar fiat currency system?
Because Donald Trump said the dollar will always be the strongest a couple weeks ago on Twitter. That's why you trust it, John.
Exactly. No, anyways, Tim, we should end it off there. But again, you should check out, of course, all the great work that we do and subscribe to our Subscribe Star that we have. And we also, want you to be able to support us in all other ways. We've been live streaming this actually on several platforms, Float, BitChute, and a whole bunch of a wide array of other, decentralized exchanges, decentralized social medias out there that are not censoring us like
DLive. Yeah, we got DLive
YouTube and others.
Float.
Yeah, exactly. So there's so many options out there that you guys could start using now, and you could view us there instead of the censored platform of YouTube. But you could also, help me out with my books. I have my books that I mentioned, the Economic Truth and The End of Freedom. I also have a massive report on the debt bubble in Australia that I have on my own webpage, which is theeconomictruth.org. You can find everything there. And then also, last but least, we were talking about Mike Maloney. We actually, work with Mike Maloney, and we have a affiliate there with Mike Malone, so you can check that out in any of our videos. We have it linked below, the affiliate code, so you could get gold at a very high rebate right now in the United States. What we got to remember is gold and silver in the United States in US dollars, it's undervalued like crazy because every other country, because they don't have the paper ETF Ponzi pricing, they are actually able to be at record highs in all the other countries because they can't manipulate it with a paper contract. So check Mike Maloney out. And then of course we have the Winnipeg Crypto Conference coming out now on October 11th to 13th. Me, Josh, Tim will be there. We're gonna speak, and we have a fantastic amount of great speakers that's coming out to our event. That it's going to be a groundbreaking event for Winnipeg and a game changer for central Canada and central North and northern North America, because it's an opportunity for these people that usually don't have a big event like this coming together and actually learning everything that's going on with the options that we're building for people to replace this whole decrepit system. So check that out. You can go to winnipegcryptoconference.com and putting a promo code WAM. And of course, least you got Anarcho-Delphia now in September is coming up right away. And same there, you got promo code WAM there as well. So if you're out on the East Coast, make sure that you go there, because Josh and a whole bunch of other fantastic speakers are going to be there, like Mark Passio and a lot of other great speakers. So please check those out. But this is John Snyson and Chipper Choate signing out from World Alternative Media. Find the truth. Be the change. Okay, so yeah, we're off, and we're still on the live chat here. If Tim, are we doing another report? I totally forgot what we're gonna do. If we're gonna do just 2 reports or 3 reports.
I know that there was another one we were talking about throwing around, doing like even the media was talking about warning of recession. That could be a potential one. Then we do have some people who have Dave and Syndicate both saying that they like our live streams, so definitely appreciate it. We haven't done too many of these live, and it is a little bit tougher than you would expect, especially if you're trying to go out to multiple places. So as John mentioned, we are out to my personal float.app, the Liberty Advisors DLive. I'm on Twitch, on YouTube, on basically both YouTube channels, on my Facebook pages, so tons of places. And so what I do with like somebody for like one of the guys I listen to a lot is Ernest Hancock, and I've got him when he comes up on 6 in the morning my time. I've got notifications from DLive and from Twitch. Well, I think YouTube and Facebook kicked them off there, but because I helped them set up the streams. So, it's just nice because YouTube, we can't always rely on that. I mean, we've seen this time and time again that they're not always going to be there. So it's a little tough where like the camera looks perfect on my end right now from Zoom, but for some reason it's all messed up, especially on like the side-by-side gallery mode. But we'll get that figured out for next time. And Dave says it's only 11:30 p.m. here. Say more, talk please. Yeah, we'll try to get one more out. And I think I did see a question from I think it was Dave somewhere on here where he asked about the something that was right up John's alley, which was the exchange. Here we go. Make a video on the exchange stabilization fund and its reaches of sinisterness. That's come from Eric Harmon. So I think you did a couple videos in that talking about it with Ernest Hancock when you were on with him.
And actually, me and Josh, this is actually a very long time ago. Me and Josh actually did a video on the exchange stabilization fund, and we actually talked about how sinister was. And in this video, we actually have groundbreaking evidence. We have all the balance sheets and everything from them, but we also have several books that they've been writing, and we have the structure of the exchange stabilization fund. So a lot more than you can find in guys like Eric de Carbonell, the guy that disappeared to Russia after doing an exchange stabilization video. We've done a very in-depth one. It's not as great as our new content, because we were a little bit of an amateur back 3 years ago, but I would still highly suggest to look at that, because there's so much great information on that video that you should really check out. And I think that exchange stabilization, but it was so funny how they're talking about how China is a currency manipulator. As soon as I heard that, I actually posted if you go to the exchange stabilization fund online, this is really
actually I did find the video too, so I'm going to try to post that in the
but actually we're talking about the exchange stabilization fund. We're talking about China being a currency manipulator, but here let me just tell you exactly what is the purpose of the exchange stabilization fund. And this is what it says. So the Exchange Stabilization Fund, the ESF, is a U.S. Department Treasury Emergency Reserve Fund, which includes holding U.S. dollars, special other foreign currencies, and special drawing rights. These funds allow the Treasury to intervene in foreign exchange marketplace to promote stability in both foreign and domestic currencies. So much for the Chinese being currency manipulators. How about the exchange stabilization fund? It's really hilarious, when you heard the double standard of all these idiots that are over there and running the government in DC that are talking about this, bad China, and then meanwhile they're doing exactly the same things on their side to try to manipulate and make the US dollar stronger or weaker. So it's just an oxymoron, and double speak in Orwellian when they go out and say that it's trying to make China into boogeyman, which it is. It's a communist totalitarian government, but the United States is very similar to the Chinese government, which they're becoming very communistic and fascistic in their state, because there's so many big corporations that are running the government and stopping all competition in the United States. So you're seeing the same, the two, both of them are two exact evils. They were fighting out in the World War II, the communists and the fascists. So you're seeing the same kind of fight popping up again between the two. And there's a good way out of this unless we actually just replace the government. And I think we're onto something, because we're talking about all these great things that we're doing underneath everything. We're talking about blockchain, and actually I have a blockchain that I'm working on called UOS, and that blockchain is basically been built to replace governance for anarchist nations or other nation states, or if they're not just nation states, but conglomerates, or if they're just a local community that wants to be together. They actually can be in control of themselves and have the blockchain replace all the corrupt politicians, all the corrupt governments. So you don't have a corporate elite that could run the government. Now we have blockchain that's true, that you can't manipulate, and it's right there in the open how you will govern your local community. And I think that's the future, where you actually implement these blockchains and remove the power that a human being has over everyone. And of course people will be like, they're so scared of artificial intelligence and all this. But again, if you replace the governance with just a software running the governance of your society, I think that's 10,000 times better than having humans that are very easily corruptible to run it. So that's just my opinion, which we've seen throughout history. Even at the Constitution, they corrupted that and totally watered it down to now a totalitarian state that the United States is becoming, and every other nation is on earth that had similar settings like the Magna Carta. You had the Constitution in Norway, all this stuff that got implemented, but they all watered down to totalitarian ways, because in the cycle of governments and governance throughout history and power, you always have the cycle of low or no government, so like anarchy or a libertarian government, to a totalitarian regime. That's the top of the cycle. So you always have that cycle continuing throughout history, and it continues with the fiat currencies and the corrupt system that they enforce upon their population. Meanwhile, they're devaluing the value of what they're forcing you to use. So it's really a sinister scam, and there are it's a high crime against humanity. You're talking about climate change being bad. I don't think climate change is anywhere near as bad as and murdering as much people as the fiat currency systems have throughout history. I think the destruction and the severity of creating money out of thin air and forcing it upon people. I don't think the economists or anybody understand throughout history what a destruction and what mass murderers that system have been and their ideas. So it's very dangerous to think that we're gonna save the world with printing more money or whatever they're doing. They're just literally like, the more money you print, the more inequality you will get, because the people on top will sit and pick out and buy assets next to nothing for zero, and then you have that interest rate apartheid on the other side with guys with credit cards that can't doesn't have any financial education, go and buy an expensive watch or expensive pants or whatever it is that they do that is very useless for the general good of that person in a fiat currency system. They need to grow that money, but instead they go in and buy things that are devaluing in value over time, and it costs them 90%, which is of course the interest rate apartheid that they created in the monetary system. And that's what of course blockchain again comes in and really take away that and gives back a real equality to everybody within that system to contribute and send money without having certain access to certain people, Tim.
Yeah, speaking of the interest rate apartheid, speaking of China being a currency manipulator, one of the really funny things about China being labeled a currency manipulator by the president is and obviously China is a currency manipulator. All central banks are currency manipulators. I mean, here you have the president, calling for lower interest rates. I mean, that is manipulating the currency, pretty much the definition of it. But what China has been doing recently is they've been stepping in to buy more of their yuan to then strengthen their currency. And so what they actually did was they stopped manipulating their currency, let the market sink it, which if Trump is trying to enact these tariffs to hurt the Chinese economy, is what he's been going out and saying, then wouldn't you expect the Chinese currency to weaken if what you're doing is supposed to weaken the Chinese economy? And so it was actually once China stopped manipulating the currency is when they were then labeled a currency manipulator. It's like this 1984 world. And then talk about the interest rate apartheid. If I try to go get a loan right now, it's like 16 to 25%. Yeah, if you're Deutsche Bank and have like 0% chance of paying back your money, you can get it close to negative or even close to 0% interest rates. And it is this crazy situation where like the people that don't need to borrow money, they can borrow money literally at nothing or below nothing. And then the people that need the money, which obviously in the free market, you can't just be lending money willy-nilly out to everybody. But the standards of how to get money in this country now, and probably most countries, are absolutely insane. So it's like, unless you are the most indebted, broke country or corporation, we'll give you millions of dollars. But for somebody like me, it's like, oh no, we won't even give you a tiny bit starting your company, even though things are exploding here. And one thing I also want to mention right now is that we have I've got to pick up my kids here probably in like about 15 minutes. Gotta leave. So I'm thinking that that maybe we won't do another video with this, maybe I can find a spot to make what we just talked about its own video, because I do think this is probably pretty good banter, and hopefully the people watching right now think it's okay. But we're kind of sort of showing you how I guess the sausage is made behind the scenes. And when I went live, basically John came on right before we went live. We had very little conversation before this, a few Facebook messages, and all I had was a sheet of paper that said, had videos, mentioned Josh being in Europe, which I forgot to do, so I didn't even do the first thing that I mentioned down here. Discuss what we're talking about, and then I have a bullet point for negative interest rates. Media warns of recession, and 3 is Trump, and then I have about 3 bullet points underneath that. So we don't. So a lot of this isn't scripted. I've had videos that have been scripted, but a lot of that isn't my style because John and I, have such a deep bench of what we can talk about in terms of just a ton of things, but especially with the economy. The problem is making sure we don't talk about too much, making sure we don't ramble about certain things. So hopefully we didn't do too much of that today, but that's a little bit of behind the scenes of how we've been doing things. See, Syndicate says, he prefers the live stream. Dave, we are listening, my friend. Thank you, my friend, because, we're just a couple guys out here trying to document what's going on. We both have, real full-time jobs outside of this and just taking a break to document what's going on because, it's like 2 months ago, 2 months and 3 days ago, I said that we had 11.7 trillion of negative interest rate debts worldwide, and now we're at 17, and it's only 2 months later. Absolutely crazy. I can't wait to see what it's going to be like by the end of the year. Like, hey, this is Temperature and John Snyson reporting on like the $30 trillion of negative interest rate debt. And another thing that we've been talking about for a while is the debt is basically, if Trump is in there for another 4 years, he's going to raise the debt just as much as Obama did. And so then you'd be looking at $30 trillion of debt, and then, another 8 years after that, you're looking at probably, and then by then you probably have much higher interest rates, so you're probably looking at then $50 trillion of debt, and then even then, if you're looking at a 2.5% interest rate at 50 trillion, boom, $1 trillion a year of interest. I mean, how can money managers not see this? I talk to people that manage billions of dollars. Like 11 years ago, I started in the financial industry, and I would get invited to these things and be able to ask questions. Then after I asked them, then sometimes, my superiors would be like, well, maybe we don't want Tim asking these questions. But, I was busting their balls on like a lot of this stuff, and basically all these guys that manage tons of money, if they do what everybody else is doing and they lose 50%, well, hey, everybody else is doing it. But if they go out on a limb and they take a strategy that takes a year or two to come into fruition, then they could potentially get fired. So a lot of these guys is go along to get along. They're doing what everybody else is doing. If everybody loses money, they lose money. They're like, oh, well, just throw my hands up in the air and say, well, we couldn't have ever seen this. And so, shameless plug, one of the ways that we're running money, and we started doing this back in September of last year, so almost a year ago, is we have some put options on, some of the major indexes, and that way we have a quantifiable loss. We also have some gold, but if the market starts going to infinity because all of these forever QEs and money printing going on, then our clients might be up. If the market's up 100, then they might be up 95. But if the market's down 95, then maybe they're only down 6 to 10 depending on the price of the option, and that's sort of a highball estimate too, and what they'd be down because hopefully the gold or other assets would then kick in as well. But this is coming. A lot of people, it just pains me, especially retirees. You're going to be camped out in bonds. They want to be really safe, so they'll have 50% of their money in bonds. But eventually, it's their purchasing power that they need to conserve, because putting all your money in bonds, putting all of your money in cash, unless the strategy is to wait for things to crash and then have the fortitude to then jump in when Time Magazine has their next cover of the economy holding on by a string. That's the time when you want to jump in, like all things. So basically, always pretty much do the opposite of what everybody is telling you, unless it's us over here at WAM, because we know that people are doing the opposite. So if you already know that you are a contrarian, then that can work for you. But usually do the opposite of what pretty much everyone else tells you to do, and usually you end up doing a lot better. Which it is sort of crazy that now we're seeing even the mainstream media talking about fears of recession, and it starts making me wonder, are they really seeing a recession? Do they just want to help hurt Trump? Are they going to foment this? And it's something that I saw before right after he was elected. The first podcast, number 1, talked about this exact situation and how the central bank and Federal Reserve would absolutely be the ones who destroy Donald Trump, and that he should not be taking victory laps in this, and he should be like Dr. Ron Paul, who, shout out to Ron Paul, had a birthday yesterday. Happy birthday, Dr. Ron Paul. But, it's just, insanity that we've gotten to this point, and we even have to talk about these negative interest rates, and we have to talk about what's going on, because I think any calmer head would have known about this stuff years and years and years ago. But right now it's all go along to get along. People are talking about how great these negative rates are talking about why we need negative rates. But ultimately, guys, check out Hidden Secrets of Money Part 4, Mike Maloney. You see the spot in there where it shows things absolutely collapsing. But maybe we'll take a few more questions right now, because we have a few more minutes before I have to go and pick up my kids. But let's see what we have here. We have The Economic Truth. Thanks for watching. That's you. But But yeah, no, definitely appreciate everybody. Got Nicole Small saying yes, Dave. They will definitely thin out the population. That is part of the plan to get the world's population down, especially once you have robots and people living till forever, and the people that aren't living forever are probably going to get pissed. We've got AZ, so I don't know if that is abbreviation or if you live in Arizona, but it says, what do you guys think of eToro? I don't actually know a ton about eToro. I know it's like an online crypto trading platform. I don't know enough about it to make a educated comment on that. So I don't have anything against it, nothing for it. I've seen them sponsor a lot of events that I've been at, but I don't have enough knowledge about them to make any informed opinion about eToro.
Yeah, and then I see Dave Bongo. He's saying HSBC. Well, actually, HSBC as well. He was talking about the threatening to leave UK, but now they're stuck in, of course, Hong Kong, where we have a huge amount. There was 1.7 million protesters there against, the Chinese extradition rules, where they, could just take anybody out of the country and then put them in gulag in China, of course, if they don't agree with, what they're saying over there. And of course, China is heavily pushing on, getting their social credit system heavily implemented into Hong Kong. And that's why we're seeing that, the protesters, they were, having smoke bombs and lasers to try to, divert attention away from the facial recognition systems. So there's a lot of things happening around the world where we're seeing, the distrust in government in general. And I think people are starting to see like how bad it's gotten with peak, the peak debt cycle on top with peak government. They all, work in comparison because they're two of the same. And we're seeing that people are more and more getting, distrustful in elections and all the, political elite that, act like kings and queens and are a bunch of morons running around like Justin Trudeau or even Andrew Scheer here, the conservative guy that's running right now. We have our elections here, by the way, in Canada, both on the federal and now we have also the provincial. And actually, they're talking about cutting taxes here in Manitoba. But the problem is, ever since they took over from the NDP, which is kind of the Communist Party here, they actually still are increasing the deficit here in Manitoba as well. The city of Winnipeg, where I live, has $1 billion deficit, and of course, so everybody's running deficits because that's how they print money into the monetary system, like through the government's deficit spending, and then that gets deposited into the banks, and then they could grow. Not anymore so much anywhere in the world. Actually, I think they've gone away from the real, fractional reserve banking, where you have to have an excessive reserve of 10%. You see in Canada, I went into great detail on the cash to deposit ratios, which is 7% at the highest at BMO here in Canada, all the way down to 0.55 at TD Toronto Dominion Bank. So you're seeing all of these banks. They're the whole Ponzi scheme is such a scam, and people need to start protecting themselves with some of the tools that Tim has talked about here, and start to use cryptocurrencies to be and create another ecosystem underneath the current system that they have, the current fiat corporate run and central bank run system, and start rebuilding your local community with those systems instead of trying to fight the big guys, like, oh, we got to get a new president in at the federal level in the United States or a new prime minister here in Canada. No, the problem is at the local levels. That's where you have to start, take over the local levels and build, rebuild governance and everything on the local level, because that way you'll be way more powerful than if you just go straight for the, federal and try to muddle around in there for 5, 10, 15, 20 years and getting nowhere. Instead, you could have changed things at your local level and create a local thriving community of people that are independent of the government and that don't need and are not sucking on the government's tit because we're forced upon that by the monetary printing and everything that the governments do with taxation and destroying freedoms for everyone, Tim. So again, it's been a pleasure having everybody on here, and it's hello, sorry, Tim.
Hey, it looks like you cut out a little bit, and your feet.
It was my battery. Sorry. So where did I bump out there? I was just going on, unfortunately.
Well, I think you're thanking everybody for watching the feed, and we do appreciate it. And just know, I mean, you guys want to talk about Facebook or censorship? Right now, I'm looking on my my Facebook page that is actually showing. Let me I'll just share the screen right now. It shows how many people it's reached. So I've got 32,000 people following me, and it's only reached 157 people, of which basically no one's engaged except for myself. So I mean, they've 157 people out of 32,000 is what they've even shown. Is what they've even shown that this stream even exists. Not even talking about live viewers. What they've even shown, 157 over the course of what? Almost 2 hours, an hour and 40 minutes.
Well,
shown it to 157.
This is the thing, Tim, is that they actually wrote out of the algorithm all the Facebook pages. There was so many good Facebook pages like the ones that you have, and I have one that is near 10,000 as well, and we nearly get anybody following that because it's basically taken out of notifications and everything. Instead, they focused on groups suddenly, and then so they basically had people create a massive following in pages and everything like you did. And then they just decided to rewrite the whole rules of the social media platform. And then now, it's basically next to nobody unless they actually, go and look at our pages that actually will see this information. So it's just, blatant disregard for anybody, content creators that put their lives into things. And then they just blatantly, just change everything overnight, and then you become insignificant, right? And just look at guys like Dan Dix, for example. He had his Facebook page taken down with 350 plus thousand people, following him, and they're just desperate of trying to shadow ban us and hide.
And he's very reserved. He's very reserved and like always can hold himself very well. Not like me, who if someone calls me out, I could potentially fly off the handle or say some bad stuff, or so I can understand they come after me.
You're Italian. But, you're Italian, Tim.
And New York, and New York too. So you got both of those going on for each other. But take a look at what happened to me. So this is not like look at me, because originally when I first started getting on Facebook, I was like, oh man, like this is so easy to reach all these people, and the easiness didn't last very long. So what I'm looking at now is one day in November 16th or 17th, I went from the day before I had 1,200 new subscribers, and then it went down to literally negative. I am at the past 2 years, I am at negative subscribers per day. Whereas somehow, I'm still a nobody, but as a complete nobody, all of a sudden I go from 0 to 32,000 subscribers within 2 months, and then one day I go from 1,200, the next day I'm at negative, and then since then I've averaged negative over the past 2 years. So somehow when I had no one following the page, I was getting more interaction than when I was at 32,000. It's not about, look at me, I'm at 32. It's like I was getting 1,200 a day, and then I got completely cut off, and then that's part of the reason why I'm on WAM right now. Is like I'm not going to go on YouTube and try to start. Yeah, you can find me on YouTube because I'm having a guy help me. I'm uploading all my old videos right now to there, but I'm not relying on it. That's why I'm encouraging BitChute, encouraging DLive, encouraging Float, encouraging once U.OS when we get that up there.
U.community. And what's really cool about this stuff, I was talking about the infrastructure that's getting created behind the scenes. You have all this infrastructure getting created, and actually U.community, the U.OS blockchain and Float is actually working together for cross-sharing on these, because that's one of the things that we're not seeing enough of right now, is we're not seeing these independent platforms, these decentralized platforms, having the sharing capability between each other. So now with Kingsley Edwards over there at Float and my team at U.OS, we're actually working on building our communities together so we could actually share our and work together as against the big social media monopolies out there that are censoring us. Where we can work against them together as a decentralized community, competing, but meanwhile we're actually letting each other share content on each other's platform instead of you have Facebook stopping people from posting minds.com or Steemit or whatever it is, right? So it's just where they censor people, like where that happens, we got to come together, these decentralized platforms, work really hard together on promoting each other, but then also compete, put out the best possible product to the population so they would be willing to use that product. And that's what we should be all about. And that's what I think, especially U.community and Float are trying to do together, because we really believe in this decentralization and giving the people back the power to control their information, and to be able to have a free way of free speech on the platforms. Meanwhile, you have all these other decrepit old monopolies that are basically dying off because they're censoring people left, right, and center, and they have AIs running amok, controlling every single little aspect, and then banning random people off there, and it's just gotten to a point where it's a point of no return. People are starting to distrust these big monopolies as well, these big tech monopolies, because they're seeing them working hand in hand with the government when it comes to giving information over. So as well, so you see like a dying centralization, a peak centralization, as I call it, because you have that cycle. Wherever you go in the world, no matter what it is, you have centralization to decentralization. If it's in microbes or different mechanisms in the human body, to a whole wide array of governance, to computing, everything you see is centralization to decentralization cycle throughout history. And this is, of course, like on the human side, it's of course because we always tend to forget history, and we always, let people get forward with controlling us more and more, because we're getting lazier and lazier. And then, of course, we're giving up all our freedoms, and we sit in a totalitarian grid, which they have in China and a whole bunch of other places. It's super simple to implement.
Yeah, and even now in China, this goes along with the cashless grid. There's 2.2 million Chinese who aren't allowed to travel now. And then we do have to get going now, because I'll just wrap it up right now. But we've got I wanted to mention too, maybe we can do a video on this, where HSBC, being based in Hong Kong and obviously England as well. China is not going to be very happy about using HSBC at all, so it'll be interesting to see what happens with that. We do have someone right now who Dave Bongo Slide was saying something along the lines of, where is it? Basically like, hey, since you guys are going to be kicked off, make sure you copy all of your content. It was something like that. I can't find it right now. But what we're doing right now is Ernest Hancock of freedomsphoenix.com. He's the guy who created the Ron Paul Revolution logo, had the first Ron Paul meetup group at his house. A lot of people know him in the Liberty community. A lot of people know him in the crypto Bitcoin community. Probably the second radio show there was to start talking about Bitcoin regularly, behind Free Talk Live. But anyways, he has a IPFS, interplanetary file sharing, and what they're doing is it's a way to system where basically the information is up there. It's sort of like Tor, where it's going to be seeded on other computers around the world, and they can't.
But it's recorded on the blockchain.
It's recorded on the blockchain. There's no way to be able to take this down. So they're really going to wish they didn't mess with us, because not like just me, but with everyone in this Bitcoin community, because now guess what? The new alternatives, you're not going to be able to shut down. You're not going to be able to stop. You're not going to be able to censor. You're not going to be able to shadow ban. And now if you can ban people individually if you don't want to hear their garbage, but they're going to wish they didn't try to stop this. And maybe is it going to be ready in operation? Yeah, we already have. I believe Dan Dick's videos are up there. James Corbett was number 1. Luke Radowski, Derek Bros, a few other big people.
Yeah, and also actually at World Alternative Media here, he told me as well that he has all our videos up. So it's really fantastic. He's basically securing our future by putting all this information out there that they can't just put off a switch and then all the content is gone forever. It's basically like the Alexandrian burning of the Alexandrian library. That's exactly what it's a modern day, book burning kind of thing that's happening. When they do things like that, they, memory hole and remove books just out of the ether on Kindle. If you download it, it disappears. If there was like the anarchist cookbook or whatever that they censored there, of course, and it just disappears. And it's just memory hole, because that's what it's all about. What you've got to understand, when you build like any new communist type of system and totalitarian system, you need to kind of remove and rebuild history. So you need to remove any trace of the past history, and even censored and removed Nazi movies off of YouTube. So that's what is happening here. They're trying to memory hole history, so people will forget about the history and then bow down to the current paradigm, which is the totalitarian state that is building up here, and that is the danger here. So that's why IPFS. We got all these decentralized platforms that is going to be so important in playing a part in the future of freeing humanity instead of making us enslaved.
And we're at the absolute infancy of this. So whether it's using pre-search, which we've done interviews with Colin Pate before.
Yeah, I met them in Toronto. Fantastic guys, by the way. They're they're doing really well. They have 1.2 million subscribers to their search engine already. And then you, of course, have on the other side, you have Brave, the actual creator of VoIP and Firefox. He's put together another fantastic, browser. So these guys, like Presearch and Brave, they're also on the search engine side, creating, solutions that are decentralized, that take away the control grid and tracking mechanisms that the government has on us, Tim.
Yeah, and I know Josh has some new videos that he posted. So let me try to find this right now to share the screen over here before we head out. But we see, so Josh had a live Q&A from 3 hours ago, and I'm not sure how to pronounce it, so I'm going to butcher it, but Sevilla, Spain. Had a great one on the Britain's pensions crisis. He was at the Pantheon, talking about the crisis in Italy. Of course, we've got Jeffrey Epstein, and the mystery around that just widens every day. I mean, certainly, when the government came out just a few days before that, it was like any conspiracy theorists, basically are financial terrorists, and then like a day or two later, then Epstein supposedly
I love the Clinton memes that it just exploded after that. That was pretty hilarious.
Yeah, I had an Epstein meme that I made in 2016 because I didn't start making memes till 2016. But I actually had, it wasn't very good. It had a lot of information, but it's just so great to finally see, some sort of, whether you count him supposedly committing suicide justice or not, but at least now it's sort of out there in the ethos. But probably any second now my wife's gonna come in here and be like, why aren't you picking up our daughters? So I do have to cut this, but thank you. Yeah. This is Tim Picciott and John Sneisen from World Alternative Media. Hope you guys enjoyed, seeing a little bit behind the scenes how this is made. If you guys, if the comments are good and you guys like this, we can keep doing more of these as we can sort of kill two birds with one stone. We can do more interaction, and then it's something that we were filming anyways, so we'll just go back, cut it. We'll have these videos available in probably tomorrow or the next day. But thank you so much for watching. I'll let John say goodbye as well, but thank you very much.
Yeah, it's been a pleasure, guys. And as always, we really appreciate what you guys are doing. So make sure you support all our work and Josh's work here at World Alternative Media to bring us forward to the next stage of communication here. Follow us on all those platforms that we were talking about, all our work and Josh's work, because that's where our future lies, not unfortunately, in the monopolies that we're stuck in right now. And we're just building there. But meanwhile, we got to be on these centralized platforms to keep on, bringing the word out to those people that are not aware of what's going on. So, yeah, that's, our passion is to help educate the population and to bring forward solutions that can make your life better. And that's what we're all about. We're all about the passion of humanity and wanting to bring the world to a really better place, a peaceful place, without, the system of fiat currency that brings wars, murder, mass corruption and deaths all around the world is created from these the possibility from government to print their own currency, and it's time to stop that. And it's time to rebuild the world into a greater society and a decentralized society that is run by individuals, not by a group of people that can control anyone. And that's what we need to understand, is we need to get past that and really compassionate about the world, because people say, oh, you don't care about the world. We're very compassionate about every single human being on this planet, even the people that disagrees with us. We want them to have a wonderful life and just thrive on this planet, because we're only here for a finite amount of time, Tim, and we got to make the very, very best out of it to live together and create a fantastic society for humanity's history to remember, hopefully.
Yeah, well, thank you. It is 115 degrees out, so I do need to change real quick before I head outside. But Tim Picciott, John Sneisen for Alternative Media, signing out, and thank you very much. Bye, guys. Find the truth, be the change. All right, let me.